and good morning, distinguished guests and honorable judges. Now, we're talking about listed securities and trading. Obviously, we're talking about the Pakistan Stock Exchange. The trading mechanisms, the trading systems, we're all well known to why it's done, how it's done. But disputes are always going to be a part of this particular business or this particular industry, however you want to call it. And that is manifold. The rate differentials, the customer claiming that this is not the rate when I said that you need to execute. I did not exactly go for financing. It was just outright buy. Clients unable to trade because of systems downtime. And most importantly, clients claiming or customers claiming unauthorized trading in their ledger accounts. So what the PSX did was that it created its own dispute resolution board, which is the PSX arbitration. Under Section 18 of the PSX rulebook, which is the regulations governing the exchange, there's a well-formed arbitration board which takes up all the disputes between the clients and its brokers and vice versa. Again, there's an appellant board as well. There is a single arbitrator or an arbitration panel depending upon its jurisdiction and a quantitative value. Now, this was a step which was very well appreciated because the majority of investors are retail sector in Pakistan in the listed securities. So if all of these disputes ended up in court, the volume of litigations would just be exponentially increasing and the burden on the courts would increase a lot more. Now, has this been effective? Yes, it's been very effective in reducing. But I'll give you some piece of statistics which will actually shock you right now. In the year 2023, there were more than 300 complaints received by the Pakistan Stock Exchange regarding disputes between clients and its brokers. The more than 300, that's, I think, a reasonable number. But the shocking number is only six went up to the arbitration forum. That's it. So what happened about the rest of the 295 odd numbers? Where did that go? Now, I'd like to bring the attention to yesterday's panel. Mediation is the new plague. Honorable Justice Junaid Ghaffar was on that panel, so was Ms. Naveed Merchant. I wish if that statistics would have been played over there. The 6 that went to arbitration were good. The rest were actually resolved by informal mediation being undertaken by the PSX and its own accord. They've actually reduced the burden of arbitration as well. The mediation is actually a very big success at the PSX level because, again, it's a retail sector. You don't want to burden formal dispute resolution mechanisms on the PSX arbitration and certainly not onto the judiciary over here. The PSX has to be lauded for its efforts at that front, undoubtedly. And why is it working? Because the brokers can't go against the PSX award. I mean, they are a licensed entity. If they decide to say, okay, we're not following the PSX award, it will have consequences on the license renewals. So they are bound to follow it. And of course, for the common man, the retail investors, it's a speedy justice, speedy resolution to their complaints. So the arbitration is there, it's functioning, but more importantly, mediation is the one which is taking over. Now, let's just get to the core subtopic over here, dispute avoidance. How and what has PSX done to ensure that disputes are minimalized? They'll never be eliminated. Disputes, litigations, they will never be eliminated, but they can be reduced certainly. And there have been a lot of efforts by Pakistan Stock Exchange and the Securities and Exchange Commission of Pakistan in bringing in regulatory reforms and regulatory conditions which have reduced the number of disputes. Again, 300 disputes in 1 year as opposed to 294 disputes in the year 2022. That is a very, very small number considering the volume of trades which are taking place at the PSX on a daily basis. That is a very trivial number considering the number of customers and investors we have on the PSX. So what has the PSX done? What has the SECP done which needs appreciation for that effect? Each order of the client has to be on a recorded line if it's given on the phone and a trader assistant. If it's been going through the mobile app or an online mechanism, it's already having a log. The client can't go back and say, oh, I did not place this order. This dispute that I do not own it, that is eliminated. There are day-end confirmations. Every single day, every single trade that an investor makes, he gets an email on his registered email ID that this is what you have done. If you have any problems, please raise a dispute. We will look into it right then and there. The quarterly account statements, whatever you've done in one particular quarter has to be gone to each individual investor. And more importantly, trading can only be done through authorized individuals only, which is very important for corporates and mutual funds and all the banks where have treasury functions. Not everyone can go ahead and say, okay, I'm going to place an order on behalf of an institution. It needs to be the authorized person. Risk disclosure forms have been enhanced. The risk disclosure acceptance level has actually accepted by the clients. Payments to be made by banking sector, banking channels only, sorry, my bad. Banking channels only. It can only go from a client's account to the broker's account and no other way. The cash dealings have been eliminated altogether. And there have been separate accounts where client funds are parked. The broker cannot exactly use it. It's being reported to the PSX. There's separate reporting to the auditors as well of the company. They need to be accounted for. Is this enough? Can more be done? Of course. The majority of the disputes that come place or arise is because of private dealings between a broker and the trader. Sorry, trader and the client. They actually correspond unofficially through WhatsApp channels or their own private personal numbers, not through recorded lines, which makes it very easy for the customer to go back and say, I did not authorize these trades. The trader did it on his own. This is unauthorized trading. I am not willing to own it. And that's the biggest cause of dispute these days in PSX. So these methods are there, recorded lines and everything, but they need to be strengthened. Mobile phones are still siphoned off into the trading rooms, unfortunately. We see that regularly. But why can't we have recording facilities mandatory on mobile phones as well? We've got that facility. There's a cost to it, fair enough. The broker can accept it or the regulators can actually take it on their board because all brokers will be able to have that because of the volume. But recording on mobile phones and registered mobile phones of each trader, we can have mechanism that traders can't have more than one mobile phone. I mean, somehow there has to be a recorded facility where all trades are recorded and that there can't be no room for private and personal trading. So that is which I think an area for improvement for PSX. Now let's move on to the second aspect of it, which is mutual funds. It's something, again, we all know, collective investment schemes and all that. Open-end schemes, investments are being made at the market value, the net asset value of each unit. The net asset value is calculated based on the value of the investment portfolio of the individual scheme. Now, where a dispute can come in over here. Now let's break it down. If a client or a customer claims that the value of the unit is incorrect, that's not going to be very tenable. That's not a tenable position because the value is calculated as per the methodology and concepts delineated in the constitutive documents. That's not going to happen. That's not going to be a very tenable complaint. The complaint that losses were occurred due to poor fund management. Now, we're entering into a very subjective area. Was the fund manager prudent? Was it not prudent? That's subjective. The objectivity of it is, was it done in accordance with the methodology given in the constitutive documents, in the offering document, and the trust deed of the fund? If the answer is yes, then again, the dispute chances are very low anyways. The biggest dispute in the mutual fund sector. The client claims mis-selling. Now, the dynamics of the mutual fund sector is that in order to make sales, there are sales agents and distributors which have been engaged by AMCs all across the board. They go pitch their investments and the schemes to all these investors, and then they end up subscribing. The customer comes up and says, I was told that this is a guaranteed return. I was told that this particular product will give me a steady stream of income every month, and so on and so forth. So that is the biggest challenge that we are facing. The distributor and the AMC, the distributor and the client, what is being told between them, what is being shared between them, is it actually in accordance with the terms and conditions of the constituted documents? And a lot of times, it's not. And I think 99% of the disputes in mutual fund industry stem from that particular aspect only. How do we curb, again, back to the focus area, the subtopic, dispute avoidance. Disputes will take place, as I said, but dispute avoidance. What can be done to avoid these disputes? That's the biggest aspect. Now, I think the function of these distributors and sales agent or the compensation is linked to the number of sales that they make. If they end up saying that they have made X number of units or got X number of investment in a particular scheme, they get their cut. They get a part of the pie. Let's change that. Let's align the structure of compensation to long-term goals. It's not just sales, but it's also how satisfied the client is. How long-term relationships has the client built with that particular scheme? How many complaints were received against that particular sales agent? These are the things which will help ensure that incentivize, that the overall stakeholder goals are aligned. It's not just a sales pitch that get me the sale, I get my cash and I'm out of here, and let the AMC suffer. Another aspect is risk categorization. The SECP has given forms and standardized guidelines over here that each customer at the time of making an investment needs to be assessed for his or her risk appetite. Is it a low-risk person? Is it a guy who's a risk taker? Does he have the capacity to assume a high-risk product? Risk categorization is just there for indication and for advisory, and it's generally disregarded, at least by the sales agent and distributors. It's recommended that this particular function should be outsourced to independent third parties. Specialists go on, they conduct the assessment, and they categorize the customer as risk averse, risk taker, medium risk, high risk, or whatever it may be, as far as the risk appetite is concerned. And accordingly, advisory must be given to that particular investor that you're a risk averse person, you don't have the appetite, please don't go for, let's just say, stock market fund. Take an income fund or a capital protected fund, that would be more suitable to you. So that is that the risk categorization is something that needs to be done independently, not through the sales agent. And finally, what if a person with low risk appetite voluntarily decides to go into a high risk product? There's no law stopping that. There cannot be any law stopping that. So how do we ensure that the investor is actually aware of what is he getting into? That's a high risk product. There's a big chances of loss coming into it. How do you know that the AMC is comfortable with that? So there needs to be a separate statement, not just a generic statement, a separate statement that I am a risk averse person, I have a low risk appetite, voluntary for this particular investment, I'm going for a high risk product, and I will not hold the AMC responsible for allowing me to make an investment into a risky product which is beyond my risk thresholds. That is an imperative thing that actually the customer can't go back and say, I am a risk-averse person, this was my life saving, I've lost it because of mis-selling. All of these complaints will actually reduce greatly. Now, dispute avoidance is the way forward. As we were discussing yesterday as well, Barrister Shiraz made his speech about FIDIC. We need to make those efforts. We can't have small retail investors going into arbitration or even litigations. For the judiciary has a lot more serious and sinister stuff to do, and with all due respect, these retail claims can and should be handled at a very low level. So dispute avoidance clauses would be helpful. I don't think that is not a very high probability in Pakistan. You see how the trading works over here in Pakistan. When you enter into a particular trade on the ready market, the identity of the counterparty is unknown. It's just a PSX platform, it's a buy and sell order, and it's just executed by the trading engine of the PSX. Once the order has been finalized, it is taken over by the National Clearing Company of Pakistan, NCCPL. They take over and become the counterparty through novation. The legality of this particular concept of novation is covered in the Securities Act 2015 and the NCCPL's regulations, which are made as a part of the clearing company's licensing and operations regulations. So when NCCPL comes in as a counterparty, they guarantee settlement and completion of the transaction. So you can't exactly say that I did not agree to this particular trade. It's matched on the PSX engine and it's settled by NCCPL. there's no chance for someone to go around and say, no, it's not happening. And that's the same case for negotiated deal market or over-the-counter market as it's known in the UK. Again, when you place the transaction while you know the counterparty, it is still taken over by NCCPL for settlement. And in case there's a default, while NCCPL is doing it, NCCPL will make good such defaults through its own funds. It has a settlement guarantee fund for that. And then it will, of course, take default proceedings against the securities broker.